The Palm Beach County apartment market has seen some ups and downs over the past couple of years, but in 2012's first quarter, the market saw some big gains both occupancy and in pricing. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your West Palm Beach update. All three of the South Florida markets have seen some ups and downs over the past few years, but none has been more extreme than West Palm Beach. Take a look at this chart showing year-over-year rent change numbers, and you can see that West Palm was quick out of the gate in recovery, pushing rents up 4.7% annually back in Q3 of 2010. And that was one of the top performances nationally at the time. But then we see a big drop off in rent growth levels as low as just 0.6% annually back in Q3 2011. And that was one of the weaker performances nationally at the time. But then in the past couple of quarters, a big surge again. Rents up 5.2% year over year in Q1 2012. By comparison, rents were up 3.8% in Miami and 3.1% in Fort Lauderdale, even though occupancy rates are better in both spots. And a big piece of West Palm Beach's year-over-year rent increase came just in Q1 2012. Same-store rents up 2.5% in first quarter, and as you could see, that was the largest increase in the south region of the country, which includes 42 metro areas. And that was a bit of a surprise given that occupancy is still in recovery here. And we see a few other surprises on this top rankings list as well. Nashville second, 2.4%, followed by Fort Myers, Naples, and Memphis. And let's switch to occupancy. As we mentioned earlier, occupancy is lower in West Palm Beach than it is in the other two spots in South Florida. In West Palm Beach, 94.3%, as you can see from this chart. By comparison, it's 94.6% in Fort Lauderdale and 96.5% in Miami. But as you can see, occupancy did shoot up 0.9 points in Q1 in West Palm Beach, and that put occupancy here above 94% for the first time in 5 years. So an occupancy recovery did take longer in West Palm Beach than it did in the other South Florida markets, but what makes this increase especially encouraging is that it came at the same time we saw a big increase in rents. And prior to this, every time we've seen occupancy growth of any meaningful level, it's come at the same time that operators have shown very conservative pricing strategy. And a couple of submarkets to highlight for you. Boynton Beach, Delray Beach, best of the bunch, driving the Metro's quarterly improvement with a revenue jump of 5.5% in first quarter 2012. That came with a quarterly rent growth of 3.9%. And occupancy growth of 1.6 points, and both were tops in the Metro, and occupancy here is also at a Metro best, 95.4%. And one that hasn't done quite as well is the West Palm Beach submarket. This is mostly the city of West Palm Beach, and this was the only submarket not to see any quarterly rent growth, and though occupancy did tick up 0.7 points in Q1, the rate was still weak at 92.9%. Now for the forecast, overall we do expect general momentum to continue in the West Palm Beach apartment market, but it's going to be tough to maintain and probably impossible to maintain the pace seen in Q1 2012. The shadow market is still very active here, privately owned condos and single-family homes offered for rent, and also the local economy just hasn't shown a whole lot of momentum yet, and because of those two things, we expect to continue to see the West Palm Beach apartment market continue to move ahead in a 2 steps forward, 1 step back pattern. And that wraps up for Palm Beach County. So until next time for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.